Ladies and gentlemen, good day, and welcome to the Q4 FY-25 AIA Engineering Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management of AIA Engineering. Thank you, and over to you, sir.
Yes, thank you so much, operator, and we can start the call. A very good evening to everyone, and thank you for joining the call. I have Sanjay bhai, this is Kunal. There is Sanjay bhai and I who are going to interface with you today for the post-quarterly results for AIA Engineering, the fourth quarter for fiscal year 24-25. I think the year has been pretty dramatic in terms of a lot of global upheaval. You've got macro events from wars to shipping issues to geopolitical issues to the tariff measures that have been put along, and a lot of assumptions that generally we apply when we are doing long range planning, I think stand in question. And with that, we are happy to take the call. Our business has seen some adjustment in these macro events which are applicable to us, and we've shared commentary on our worldview on it. I will do a quick summary of numbers, and then I'll have Sanjay bhai share a business update, and then we can get on to Q&A. But broadly, none of our macro directions, conversations change. I think we remain confident about the power of the solution that we have and the disproportionate consequence it has for our customers. There are challenges in terms of the whole conversion project that we have, which is from going from forged to chrome and the mill liner and all of that. But all of these are just the learning parts of this whole growth journey, where every country is different, every culture has its own way of going about risk or governance or change management, implications on costs, starting costs, all of that. And I think each day there is learning and all feeding into something that we believe are further deeper modes into the business. So with that caveat, let me do a quick summary of the financial snapshot. We sold 68,741 tons this quarter, and that brought our full year sales to 255,000 tons, which translates up to 4,200 crores of sales and 1,141 crores for the quarter. 4,200 for the whole year and 1,141 for this quarter, translating into EBITDA of 399.52 crores and PBT of 363 and profit after tax of 285 crores. Taking the profit for the whole year or EBITDA for the whole year at 1492 and profit after tax at 1060 crores. Our other income reflecting largely the drawback and the road tax, the small amount that is available, that reflects the other operating income. The non-operating bit has our treasury and some bit of foreign exchange gain coming from the weakening of the Indian rupee. But the total other income, including the operating non-operating bits, being at 92 crores for the quarter. Our working capital continues, in sync. No dramatic changes there. Revenue the tonnages are mostly comparable between second and third quarter. Third and fourth quarter. We did about 66,000 in the third quarter and 68,000 tons in the fourth quarter. So generally comparable between third and the fourth quarter. Our current capacity, just to reaffirm, stands at 460,000 tons, and we've announced plants at two locations, one in China and one in Ghana. We're looking at 50,000 tons each. Both these are new locations for us. We are excited about the strategic intent behind doing it, and we are working, both projects are at different stages in terms of from conceptualization to land acquisition to all sorts of approvals. I think the China plant, should be up and about in some form, hopefully in next 12 months. And as we go ahead, because it's our first time, we don't want to put firm dates, because there are a lot of learnings that are built into that. And the Ghana plant, so in the next 12 months, the next 3 or 4 quarters, a lot of that approval work will be done, and then it will go into the execution and then the commissioning. So allow us maybe 2 more quarters to give a little better sense on what's happening with those projects. Outside of these 2 projects, we're looking at about 130 crores of capex, which is largely some amount of renewable power, balance capex, for work that we've done in plants in India, some amount of maintenance capex, and some land. So these are all, all can be rolled up as a maintenance capex for this year. So around 120 crores, 130 crores for that, and plus we will be spending over next 2.5 years on the 2 plants, one in China and one in Ghana. That apart, one macro development before Sanjay talks about our businesses around the anti-dumping bit, and so more specifically about the anti-dumping bit in the US and the larger duty tariffs that have been applied, by US, on many products across the world. So our lawyers have advised us to, be little muted about, what's happening, how it's going, because some of these are sub judice. In some jurisdictions, we're, defending our positions, and a lot of what we say here is actually being used as transcripts, as inputs, and so which is where all we will say right now is that, so for US, there is a dumping duty now applicable at 9.6%.
Including CVD.
Including CVD. There's a ADD and a CVD, both put together at 9% plus. And there is a tariff, our product falls under the Section 232 tariff. So there is a duty that's under that. As we speak, our business continues. Our customers are paying that duty, like a lot of US companies are for a lot of products. I know there will be lots of questions. We have, very few answers. We can't crystal gaze into what's happening because there is a lot of policy shift, in regards to the US. As I understand, India is in active bilateral conversation, and we are hoping that we get back to business as usual or a duty structure that allows long-term contracts. So we will not be able to speak more than this.
Yes.
But as we speak, our business continues. The customers are paying the extra duty cost. So we don't currently have a material change in our US exposure as far as sales are concerned. Of course, there is routine plus and minus that happens. This may change going forward, but as it stands right now, it looks okay, and there is no basis for us to say, and what will be the impact in 3 or 4 quarters. So I would like, with everything else, please allow for the duty, the tariff structures to stabilize once the 90-day hiatus goes, the bilateral pact comes in place. So maybe a quarter or 2 allow us the liberty to deal with it in best possible means. As far as the duty protection structures, the rest of the world is concerned, you've seen the protectionist measures in broadly are, coming in our favor. It may come in at a certain level, but, a lot of these countries realize that, the nature of a dumping duty is when a company tries to sell below cost, below a fair price, etc. And our margins do not suggest we are engaging in, that kind of competitive behavior. So, but obviously there is a local manufacturer, and and they will do what they need to, to protect their business. And we have to do what we have to do. So in Brazil, we have seen that what used to be 12% plus, the anti-dumping has been terminated. One of the rare cases in Brazil where our duty got terminated. That's a strong vindication of our pricing practices, right? One may optically present it whichever way one wishes to, but in terms of our competition. But the reality, we are not giving up an inch. We are making sure fair and accurate presentation is done for our situation. And we are here for the long haul. Maybe things change for a year or 2 or 3. But, even if it means an inch, we are putting in all our efforts. So some of that success that we are proud of is that the dumping duty rightfully got terminated because there wasn't a fair case for it. And the CVD portion, which is at 6% plus, it's in the process of being revisited. We'll have the outcome of that soon. But we would like to assure everyone on this call that as far as AIA is concerned, and with margins that are already publicly available, dumping is a far way away as far as our pricing practices are concerned, right? So there is a lot of other geopolitical and other considerations, and which we are learning to navigate as we move forward, becoming sharper as far as navigating that condition is concerned. So with that said, I will have request Sanjay Bhai to share his bit, and we go on to Q&A.
Thanks, Kunal, and good evening to all of you. So as Kunal explained quite a bit, and I'm happy to say that as we had anticipated that we should definitely do around 250,000 tons of sales this year, we have done about 255,000 tons as clearly indicated and guided over our Q3 call. A little more heartening and gratifying fact is that while there is a top line degrowth of about 14% as compared to last year, the profit degrowth is only about 6.5%, which means our margins have not only remained intact, but rather they have a little bit improved and they are remaining quite robust. At the reported EBITDA of about 34-35%, and if you knock off the other income, treasury income part, we are still at about 28%, so that is very gratifying. Another aspect I want to highlight is that this is indeed a year where we have actually put ourselves into a very different strategic mindset. The long-term philosophy and the long-term opportunity remains absolutely intact in terms of 1.5 million ton opportunity. What we have done is we have revisited the drawing book, and now we are at a stage where we have already started implementing our new strategy of spreading our wings and also simultaneously from India working on all those opportunities which are there in Latin America, in Africa, in CIS, in a lot of other parts of the world, with a very clear shift on grinding efficiencies or the kind of solutions which we believe nobody else in the world is capable of offering. But as Kunal said, these are the times of extreme volatility. We are implementing as we speak, apart from the new locations where we have started our work, quite a few other opportunities, contracts, projects on which we are working, and we should be in a position to come back with a more firm indication about how the current year will look like. But at this point in time, we believe that we don't want to give any guidance about the volume growth for at least this year, with a clear indication that our endeavor is to definitely achieve a reasonable level of growth. But I think it's a bit early for us to give you or quantify the same with any clarity at this point in time. On the capex side, Kunal has already explained the progress on both the locations is reasonably good, and we expect China to be on ground and start getting at least the first phase operational by the end of this fiscal. That is our target as we speak. Over next few quarters, we should be able to share some good further developments with you. With this, I request the moderator to open the house for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Bhumika from DAM Capital. Please go ahead.
Yeah, good evening, Sanjay Bhai. Good evening, Kunal Bhai. So my first question is on the US anti-dumping duty which has been levied. So the total duty is 9.16. Is there anything apart from that in terms of base duties or anything else?
Yeah, so there is a overall duty that Trump has applied, right? There's a baseline duty, there's a section, there are several things going on. There's a duty on aluminum and steel, which is a different, chapter. So there is a base duty that is there under the,
It is universally applicable.
Yeah.
Absolutely. Yeah. Okay. And, so post this tariff, post this duty which came up and the tariffs which came up, one is, can you outline, call out what was FY-25 sales to the US geography in million tons? And how are we seeing, I know you said that there hasn't been any drop in the volume so far, but if you can just get the FY-25 volume numbers for US geography.
Bhumika, there is, like I said, there's a lot more curiosity besides the investment fraternity about this information. US is an important market, but it is less than, I would say, 8-10% of the total volume. Broadly, I'm saying. Okay, so the materiality is there or not there, right? Either whichever way you look at it. And for now, the nature of the product is such that there is capability, there is extent, there is capacity, there are several things linked to it, right? So, I mean, except for one or two other countries where we have seen a different buying behavior, in US is a little different from that standpoint. Like I said, today the business continues. If it's continued today, we have visibility for a quarter or two ahead, because everyone in the US, forget a buyer of high chrome grinding media or liners or other products. Even someone importing grains has confusion on what's going to happen. So that's what I said, that rather than nitpicking and unpacking what's happening, let's just ride out next 2 quarters and we'll get exact clarity on what it is. It will be a little bit more imaginative and speculative on left or right and trying to unpack it into smaller numbers. As long as business continues, we should be okay for now, right?
And I will just add, our endeavor is to ensure our teams, everyone, we ensure that there is nothing materially lost in US. We still continue with more or less the same volumes. Bhumika? Moderator?
Bhumika line is got dropped here. We'll move to the next. The next question is from the line of Chirag from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Sir, some updates. So last quarter, you had mentioned that we are working on some couple of large mines, and possibly if they can convert, there could be a 30,000-40,000 metric ton addition. So any update on that front, sir?
We are working on several mines, and our endeavor continues.
Okay. So, since in last quarter, we had mentioned that on the revised base of FY25, we could again start looking at 25 to 30,000 metric ton addition per annum. And now in the opening remarks, you mentioned that you would not like to give any volume outlook for FY26. So is it just a US uncertainty, or do you still see the momentum of conversion from forged to grinding media not recovering that fast?
So I would not want to pinpoint any particular reason, but let me assure you one thing, that we are not going back on that target. That is point number one. But what we thought, that as we speak, as compared to last quarter, again, so many things have happened in this world, and things continue to happen. You agree with me? Correct?
Yeah, correct.
So while we are working on several fronts, and our endeavor is to ensure that our medium to long-term growth strategies remain intact and we become a predominant player in this industry, we felt that let us wait for a quarter or two and see how few things are unfolding before giving a specific growth target. But I am very clear, I am not going back on what I said last quarter.
Okay. And that's happening.
There should not be any other inference.
Okay. And sir, the last question on our mill liner business, sir. So just wanted to know how in FY25 that business fared and the outlook for the next 1 to 2 years, and any change in strategy in terms of ramping up of that business.
No, I think it has been doing very well. Lot of focus, lot of investment is going in that business, and we remain very bullish on that.
Okay.
As you are aware, we have already, made some further expansions in that particular business and investment in that facilities. So we are working very hard on approaching this business on multiple fronts. As we speak, we have also increased our stake in that Australian company to 59%.
Correct. So, sir, has that business started contributing in double digits to our total annual volumes? Is it possible to share any volume, broad ballpark outlook for that business?
We don't share specific volumes, but of course it is double digit. Of course.
Okay. And that business is currently outgrowing the grinding media business in terms of volume growth?
No. So listen, grinding media still becomes a predominant volume giver. It can't outgrow the grinding media, but it is growing.
Yeah.
It is growing. Definitely it is growing.
Yeah. Okay, sir. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Okay. Good evening, gentlemen. So could you outline the thought process of investments in China and Ghana, because this is pivoting from a strategy of being in India in a single location?
So idea was that we've seen last 3 years, we've furthered our solutions in terms of the ability of our consequences. We've been hamstrung by a few things. One of the things has been freight, right? There's a large implication on the transit time. For example, when you're going to South America, it's almost a 80-day, 90-day transit time. On top of that, with the whole Red Sea thing that's been on for last 2 years, in between the China-US container thing, there is a little bit of freight anxiety that sometimes customers express, saying, the freight's going on from 1x to 3x, containers are unavailable at times, or the shipping time that it takes. What if there is a global event and where supply does not come in? So these are just conversations. These are not showstoppers, but these were regularly coming up to us. So we are trying to do things to say how can I fasten our acceptance with the customer, right? So we are making small bets. We are not going with a whole monolithic plant. We are going to do it in a modular fashion. We are going to do it with a small capacity, see how that goes. So it is our attempt to see. So for our plants in China, for example, our transit times are half to everywhere in the world than what it is from India. Okay, and most of our customers are mining customers where China already has a shipping corridor set up, right? So these are efficient shipping corridors to sail from at a cost that is generally half than what we see from India and half the shipping time. So that was one of the considerations to say what else can we do so that our fortunes are not linked to this one variable that has been, which we thought after COVID. So 2 years of freight issues post-COVID. Then we saw about a year that things normalized. Again, when what happened with the Red Sea issues, the freight volatility came in. So this is one of our attempts to say, making a small bet to see whether, it changes the whole approach and the game to say now I've got a capacity which can deliver and offer a better supply chain visibility, predictability, cost, from a shipping standpoint, etc. I think it is only from that standpoint. India continues to be the location. So if this is for our ability to break into a customer, give them the comfort, we'll see what happens from there, correct? The idea is that I've got a supernormal solution which can bring all these benefits to the customer, and it's taking a little more time. Could this be weighing on the customer's mind? Would this help facilitate, a faster, quicker conversion? This is our attempt to in that direction, and we are not betting the house for it. So that is the context.
I'm sorry to harp here. When I look through this investment decision, it is in a country which has little or probably no respect to AIA.
I don't think there is a debate on this beyond this. This is our strategic. This is what we are moving forward with, taking a small bet.
Sure.
I think it will be not good use of everyone's time to now, discuss a personal view. And I would love to take this offline, and I'm very happy to share, and we can go through this one-on-one after that.
Fine. And the second thing is, if you could just help us understand how are the realization different for grinding media and mill liners? If you could give us a little ballpark in terms of indication, that would be helpful for us.
So realization the way we look at it is, we've got grinding media as one category of products and non-grinding media as another category, right? So mill liners are part of the non-grinding media category. We've got vertical mill parts, we do quarry parts, we do castings for cement mills, right? So there is about a 12-13 suite of products that we do under the non-grinding media. And that overall is about 30% of the volume, broadly I'm saying. 25% by volume comes over there. The cost of making these parts is also very different. So if you ask me about the margin, my both categories are comparable. But if you ask me about my realization, my non-grinding media could be from 140 rupees, it can go right up to 230, 250 rupees. Okay, so now the weighted average now keeps changing depending on what I have done more, what has required machining, what is a 25% chrome versus 11-12% chrome. All those variables come in. Where do I need much heavier patterns versus smaller, easier patterns, right? There's a whole cost investment that goes into the costing and the pricing part of it. Some parts take up to 4 months from the receipt of the order, or design itself takes a month, or pattern making takes another month and a half to. Then there is production, sample casting, post-production there is a month-long machining exercise, almost a 5-6 months start to finish. So, and the pricing then is commensurate with that. All that costs that get accrued for that product, and hence from a margin standpoint, largely may not be very different. But from a cost and hence the selling price, there is a little bit, there is a level of, where it's not comparable. These products are strictly not comparable. But I would say between 140, 150 rupees, they go right up to 250 rupees. I'm saying realization per kilo.
Great. Just last question. About a year back or so, we had green shoots from getting into the South America territory, especially Chile. That's an area, considering the production of copper that country has and our sales, we were significantly under indexed. So if you could give us some color on where we are, because that is a geography which can give a significant volume delta.
That could be a material game changer for us, and it'll sound repetitive to say that, but we are very hopeful that we get a breakthrough soon. But we'll just have to wait for it, right? It's been a long chase and effort. We've gone through quite a bit of macro events in between. We hope that we are building on that momentum, and I'm hoping in next 2 quarters there is some breakthrough that we would get to share. But we've been in that a quarter away and not crossed the line at least 3 times in last maybe 1.5 years. So with that caveat, I'm hoping that we have something good to share soon.
Sure. Just one more question I had, because I remember we speaking about there are certain customers which had to do inventory correction due to internal challenges. Could you just give us an update on, what percentage of volume would have been lost because of that, and where are we in that?
We lost about 8,000 to 10,000 with 2 customers, 2 or 3 customers last year over 12 months. So rolling basis, that volume should come back. I think the one which was a larger customer, I think is in another max 1 quarter gets back to original consumption pattern. I think that's 1 quarter away. The other 2, will either are in the process. I think let's say now in a quarter's time, at least that volume on a rolling 12-month basis, we are hopeful will reset about 8,000 to 10,000 tons.
Okay. So is it fair to say that the drop in the volume that we have seen is none of the cases where we have lost a customer? It's mainly to do with the idiosyncrasies of the customers and their inventory issues, etc.
So that was one part of it. We did lose volume. I think we did lose volume to the competition. I think for one large customer, that went back, that went to the competition. But I think other than that, nothing has changed in that. And that was a rare event over last 20 years that we've been competing. Maybe 5 handful events where customer is that's where it is. And some part of that may be linked to the duty structures and the uncertainty and all of that. So we are hopeful that we can correct that. Hopefully, we can correct that event also.
Okay. Yeah. Thank you so much for taking my questions.
And we can speak offline for the whole once more on the logic about the China Ghana. Yeah.
Sure.
Okay.
Thank you. A reminder to all participants, you may press star and 1 to ask question. Participants may press star and 1 to ask question.
Operator, I think if this is done, we can wind this up.
Okay. As there are no further questions from the participants, I now have the conference over to the management for closing comments. Over to you, sir.
Thank you. Thanks everyone for staying on the call and hearing us. And as usual, Sanjay and I continue to remain available for any questions offline. Thank you.
Thank you very much. Have a good evening.
Thank you. On behalf of AIA Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.